Let's go to David Pearl, who writes for The Australian, but he's also former Treasury Deputy Secretary. He joins us from Canberra. Good to talk to you again, David. I was fascinated by your column on the weekend where you focused on this environmental evangelism from Ken Henry. Little wonder the governments are so desperate to go to net zero and invent green steel and green hydrogen when he's talking in such apocalyptic terms.
Thanks for having me on, Chris. I wasn't a Deputy Secretary, let me correct you on that. I was an Assistant Secretary. I probably wasn't woke enough to be a Deputy Secretary.
Okay.
No, absolutely. Look, Ken Henry, I know Ken very well, or at least I knew him very well, worked very closely with him, and he played a major role in my career, so it doesn't give me any pleasure to be critical. But I think Ken has always been a dyed-in-the-wool old-style environmentalist, Chris, and that's an environmentalist who cares about endangered species and logging native growth forests. But unfortunately, Ken, like so many other people in Canberra, has allowed the climate change ideology, if you like, to colonise his mind and colonise his perspective. And I think that I would differentiate between the old-style environmentalism to protect endangered species, which most reasonable people would support, and climate change ideology, which, as you've written about, as many of us have been concerned about for many years, has nothing to do with the environment. Yeah,
I agree. It has massive economic repercussions. Now, I want to move to the tax agenda and this so-called productivity roundtable, which has now been broadened out to be called an economic reform roundtable. Ken Henry talked about some of the issues that are likely to be raised there, including tax. Here he is.
If we continue on that trajectory, as we said in 2002, we will have no option but to raise taxes, and quite significantly by several percentage points of GDP.
So you're saying without productivity, we're going to have to raise taxes. What, in your mind, is the likely outcome of this roundtable? It seems to me that when you pull one of these things together as a government, there are outcomes you want to get out of it at the other end, preordained.
Yeah. Well, I've worked in Treasury for over 20 years, so the outcomes will be already developed by now. This is just a show. Jim Chalmers and Albanese are from a school of political management, Chris, that doesn't tolerate any spontaneity or any surprises or any real discussion in this so-called round table. So the outcomes have already been written up, and some of the prominent presenters to the round table, including the Treasury Secretary and the head of the Productivity Commission, but also some of the business people like Matt Comyn, they're being worded up by the Treasurer's office to produce some kabuki theatre in this round table, which is essentially just going to increase taxes. Let's just be frank about it.
What taxes do you expect to be either introduced or increased?
I think the government will go back to Bill Shorten and Chris Bowen's disastrous 2019 assault on investors, Chris, that you and your viewers would be very familiar with. So I think under the gun will be the capital gains tax discount. So we could see a doubling of the capital gains tax rate with no grandfathering. And we could also see negative gearing, which for asset poor people, for nurses and tradies who are buying their first home, is critical to reduce interest costs. That will be under the gun. And I think we'll also see a renewed assault on dividend imputation.
Yeah, well, we will see. They won't be able to resist. Thanks for joining us, David. We'll catch up again.